What's up, everybody? This is Jimmy with Trading Decoded. It is April 16th, 2024, and it's 4:08 in the afternoon. Today was a great day. If you didn't get caught up in the chop, and then Jerome Powell came on, and market did some crazy things after that. Very expensive day to play today. Volatility was high pretty much all day, so that was a sticker shock for a lot of folks. But today we found, a whole bunch of us took a pretty early trade for all the right reasons, and it paid handsomely. For me, it was a 49.5% winner. For most of our community members, they waited, been a little bit more conservative on the entry, got closer to 30 to 35%. We had several people make over the 40% mark, and some made even more than that. Because the move did continue down even after most of us got out. And what move is that you might say? Well, let's take a look at the chart and go see what we did. As per usual, we have all of our lines plotted. We had started to trend down in pre-market, lower highs, lower lows. Not that I was interested in playing puts aggressively. In fact, we were almost on the verge of playing calls. Our call line was 505.16, looking for the move to go up to 505.56. And our put line, albeit aggressive, was 504.84, looking for the move down to at least 504.44, but hopefully closing the gap at 503.58. Not a gap, but getting down to yesterday's low of day, which is really what we were looking for. Now, while we were looking to take a trade, waiting for something to happen, we chose to hold off on the put scenario simply, or at least aggressively, because as soon as we opened, it happened quickly, and then we were stuck below it. It came back up. We never crossed the call line. But even when we realized ADD had already started to sell off massively, so we were looking for a reason to get into puts. Whether you waited for that moment or waited for a break of support, what I saw and what most of us played was the fact that the Qs were struggling to move higher. So they were moving lower, making lower highs, lower lows coming into the open, and their most recent lower high is what was keeping them down. We recognized this all while noticing that ADD was selling off. So then it became, guys, instead of playing calls across the call line, I'm thinking we should use that as resistance reasoning and take puts here, because if the Qs hold resistance here, even if they make it down to this orange line, which it had been finding support at, we could take that as a quick scalp profit. Okay, well, when we were recognizing that and willing to do that, not only did we get in at resistance with the understanding that if it closed above this level, we'd have to stop ourselves out. We were looking for a move to continue down, hopefully through the orange line. My expected move was to 430.21, and ultimately we made it down there. And that was my particular exit, because I don't like to mess with the pink lines. But we got in here. Several people decided to take profits because we hit target 1 on the SPY. Target 2 was at 937 while the Qs were getting closer to their pink line. Looked like we had more room to the downside because ADD was still falling. Target 3 was the pink line, both on SPY and the Qs. Okay, and that happened to be the end of the move to the downside as far as Qs went at the moment, right? It found support there, bounced off, still put in lower highs, and it made another leg down, which is where these additional exits came from. Now, these exits are coming from not random spots on SPY, not because it's, we saw where the bottoms were going to be after the fact. The fact of the matter is, every one of these circles comes from the Qs hitting levels of support. Every time we hit them, I make it clear and evident and obvious to our community members by saying, guys, we're coming close to another level of support on the Qs. This is an idea. This is a good situation to consider taking profits. But at the very least, if you want to hold for more or attempt to hold for more, simply put a stop loss in place somewhere in profit so that no matter what happens, like a reversal or a bounce like this one, you leave with some kind of profit. There is nothing worse than getting into a trade that is very nicely green. You want to get more. You don't protect what is green already by putting a stop loss in profit. It bounces off, takes away all your green, and guess what you will become? Yes, folks, a hold and hoper. You're going to say down here, man, I was up 80% on my trade. I really like the way that tasted. I'm going to hold this trade. Only when it gets back down to there, I'll sell it. Guys, it's a dangerous place to be. Okay, it's a dangerous place to be, but we won't get into that. The fact of the matter is you had several opportunities to take good, clean moves. Down here was a 50% return, so I'm assuming down here was closer to 90. Either way, the stop of that move, we hit support twice on the Qs. Right there, second target down, okay? We don't know which one of these supports is going to hold, which one's not. Okay, so we always want to be considerate of the levels. Understand that they exist, understand that we can't see the future and don't know which one's going to hold, i.e., I don't mess with pink lines ever. So for me, that was my exit. Now, that said, that was an 8 minutes into the market. 8 minutes into the market. And then I posted our poll. Okay, our poll just gives everybody the opportunity. A lot of our members use this as the time to seal the deal so that they feel comfortable closing their trading accounts. I want you guys to look at the ratio here. So I posted this at 9:41 this morning. This was 9:38, 39, 40, 41. So right here, 3 red trades, 85 green. That is a 30-to-1 ratio almost. That's amazing. That was a one and done for a lot of people 8 minutes into the day. I don't know about you, but if I could have 8 minutes of my workday look like that every day, I'd be a pretty happy camper. And the folks in my community are starting to realize that this is the way, okay? We waited for the right opportunity. We were prepared to play in either direction. We just needed to know which way we wanted to go. Once ADD confirmed that the market was selling off, we looked for a reason to switch from calls into puts, also coming off of lower highs, lower lows into the open. We played the weight of the market and we took it down to levels that made sense to us as traders. That's it. Now, we moved up. Now, people were asking me, Jimmy, when would you buy calls after we had already moved up like this? So I said, well, I wouldn't buy calls unless Qs were above a level of resistance. Okay, that level of resistance on the Qs was right here. This was a strong level of resistance in pre-market. I said, yeah, I'd probably wait until we can clear that or at least breach it, right? We breach it at 1014. What we don't know, but we can't ignore, is the fact that your next resistance is only 20 cents away. That's the minimum that you'd be interested in taking a trade, at least my rule. And if we get above that, great. You want to hold on to it. Just make sure we hold support at 432.19. We closed below 432.19. That had to be your stop loss. Okay, so this was a quick trade, entry here, exit here, or you stopped out here. Whatever the case. Okay, whatever the case was, you needed to be quick and you needed to be ready. And we talked about this way down here. Okay, that was a quick scalper. Some folks held on a little too long, got caught up in this red candle. There's nothing we can do about that, guys. Okay, all we can do is protect ourselves in the event that it gets to and through where we want it to go. And that better become your stop loss. Anytime we cross one of these levels of targeted, resistance or profit targets, and we close above it, and you want to stay in that trade, your stop loss needs to become the profit target line. Meaning if we close below it, assume that it's going to come back down to support, which was right here. This is what we were looking for to happen if it closed below that. And it did exactly that. We pulled down, put in a lower high, and made it right back down to the next support. Close below that one, down we go to the next support, and so on and so forth. This happens all day long, all the time. All right. Now, when would you buy puts again, Jimmy? Well, I would wait for Qs to get back below 430.66, looking for them to move down to 430.21. Well, the first time that happened was right here at 1036. This is where 1036 is on SPY. We happen to also close below support there. We made it down through SPY support level right to Qs low of day from yesterday. Once again, it's a 40-cent move, guys. After that particular trade, I want you to start taking note of the ratios, because the longer in the day we go, the worse the ratio gets. So we were 30 to 1 here after the first trade. Now we're to 7 to 1, which is still very good. Okay. A little bit later in the day. Now, this one was a counter trend trade. It was announced as such. It was talked about as such. However, we were moving up to that solid level of resistance on the Qs. Okay. What time was this? Was this 11:27? Right here. We were talking about, guys, I wouldn't take calls up here, but historically speaking, that's been a pretty strong level of resistance on the Qs. If you want to take puts there, it's a counter trend trade. You'd be looking for this to come back down to the blue line on the Qs. And if you close above that blue line, you got to stop yourself out of the trade. That's it. Very simple. Talked about long in advance. We get through, we get to it. You entered your puts, you held on to them, you made it back down to this level of support, you got out of them. Okay. That is what's going on here to here. All right. Again, nice 45-cent move, 40-cent move, depending on when you got out. Okay. Yes, we're trending up. So that's why we talked about it as a counter trend trade. Once again, this level of resistance being broken, not just on SPY, but on the Qs. So at 11:52, Qs, once again, are pushing through and closed above the blue line. It's the same thing day in and day out, guys. If Qs can close above resistance, I would be interested in calls, and keep an eye to your left of where your next resistance is, although we'd love to see 432.79. That's it. You have resistance here. It hit that resistance. It closed above it. That becomes your new stop loss. If it gets below that level, you stop yourself out. Okay? So you got in here, you stopped yourself out here. Even if you didn't catch the top, still another decent move to the upside. You're talking 70, that's another 50-cent move. Okay? These are quick moves. Yes, I know you look at these and say, but look at all that money you leave on the table, Jimmy. Boy, if you just bought puts all the way at the top like you did the first time, you would have made a lot more money. Correct. But this time we weren't trending up. Okay? I'm not interested in being aggressive on my entries. In the morning I am, but I'm looking for the reasons to be aggressive, right? Here, when we're trending up, I want to get below or take out the most recent high or low before I switch gears back to puts. Okay. That does not happen until we get below this yellow line right here. So puts don't exist to me off of an uptrend until we take out at least the most recent high or low, which was right here. So we take it out here. Yes, the argument can be made that you get in there, you look for it to go down to the next support and hold on, moving your stops down if you want. You could catch a lot of the moves. Okay. I'm just not a super aggressive trader. And then we started to trade sideways. And then I took another screenshot of what the poll looked like at that time. So now we're just barely over 4 to 1. So again, 30 to 1, 7 to 1, 5 to 1, 4 to 1, less than 4 to 1, somewhere between 3 and 4 to 1. This is when Jerome Powell started talking. 1:15 is when he got on. And as soon as they put the man on camera, right down we go, start bouncing off. And never mind support resistance, guys. They definitely don't work. None of this, technicals don't matter at this point. If you want to gamble your money, go ahead and do it. But to believe that these levels are playable with this much volatility, with this kind of movement that's seemingly for no reason, it's a wild ride. It could be fun. Okay. And then we ended up messing up and down. So we moved up, we moved down, we moved up. It's just choppy shit. And then we went ahead and posted the final numbers for the day. All right. So you're talking barely over 3 to 1 ratio at this point. It's in between 3 and 4 to 1. The point of putting these here is not to say, oh, look at how good the community does. It's to show you guys that earlier in the day, there's a ton of people that are green and done, but the later the people keep trading, the worse the win rate gets. Still very green as far as the community goes. I am thrilled. Our win-loss ratio is outstanding as a whole. It's outstanding. But it is undeniable that the more you trade, the later in the day you go, the less the win rate increases. In fact, it decreases. There are strategies out there that will allow you to trade all day long. And if you see your setup and you feel good about it, that's fine. But know through your own journaling, you might be trading at times that is detrimental to your progress. Meaning later in the day for me doesn't work very well because a lot of things would have to change in order for my trading style to be playable later in the day. Number one, I'd have to ignore all the intraday support resistance levels in order to find a trade worth taking for enough room anyway. Number two, I play 0 DTE, which means theta after lunchtime is a problem. Okay, you get a pullback, even if the move is good in your favor, you get a pullback late in the day, man, those hurt. They take away a lot of profit quickly. Okay, so not only will I have to ignore my understanding and my trust in support and resistance to play later in the day, I have to worry about theta increasing throughout the day, which is not great. Okay, it's just not great. And so for me, trading late in the day is not a thing. I don't prefer it, but stopping doing that increased my win rate significantly. All right, so I'm doing less. And as a result, I'm winning more. If you know that the more trades you take, and I have yet to find one person who's told me otherwise, that your win rate starts to suffer, then I have to believe that you're starting a lot of your days green. You're continuing to trade throughout that day. And even if you end the day green, are you as green as you were after the first trade? And a lot of people can't answer that question with a yes. And sadly, a lot of people constantly trade green days into red ones. Okay? I watch it happen every single day. Every day. And it breaks my heart because I spend an adequate amount of time begging people, if you're good in green, or if you are having a red streak, or whatever the case is, please accept the gift of green for the day. Put an end to the red streak, even if it's for a day. Give your confidence a little bit of a boost. Put a smile on your face for the day instead of waking up tomorrow saying, oh, is it going to be another red day? You have control of that. Okay, you have control of that. If you are continuing to trade after you are green on the day, you're choosing violence. Ask yourself these questions. Pay attention to what is not working and stop doing that. If you can answer yourself, ask yourself the question, on the days that I trade more, is my win rate higher or lower than the days that I trade less? Go back and look at your trade logs. Find out the answer to these questions. And then when you ask yourself the question, answer yourself honestly and say, no, it doesn't get better. And then convince yourself to trade less. And that will start to immediately make things better. Maybe not profitable, but you won't be giving away as much money. Guys, you got to get out of your own way. You have to. The idea that you're going to hit a home run with every trade you take is asinine. And the fact that you think you're going to trade emotionless the more trades you take in the day is also ridiculous. Your least emotional trade of every day will be the first trade you take. And depending on how that trade goes, will directly affect what's involved emotion-wise on the next trade you take. If your first trade is nice and green, you're going to feel invincible, or you're going to feel like, hey, I got a nice cushion now. I can afford to take another trade. And if I'm wrong, I'll still quit, but I'll be green on the day. Okay, great. In either scenario, there's more emotion in the second trade than there will be in the first one. The emotions on your first trade being green is, I've got a cushion. You've got this false sense of security that you can afford to gamble now. How do you think that ends if that second trade ends up taking away all the green that you had on your first one? Do you think you're going to be less emotional? You think you're just going to hang it up for the day and say, you know what? I gave away all my profits. silly me, I'm done for the day. You're not gonna. You're gonna look at your account and say, ooh, I still got $1,000 of buying power. I'm gonna get back the green I lost. You're gonna take a third trade. Now you're taking a desperate trade. Way more dangerous than the first two trades. Okay, now, if your first trade was red, then inherently your second trade, should you decide to take one, is going to be for the sole purpose of making up for the first mistake or the bad trade or the trade that didn't work out. Is it not? And if you think for a second that you have no emotion in your second trade tied to what happened in the first one, you're only fooling yourself, and you will continue to struggle in this business. It is impossible to trade without emotion. It's possible to learn to not allow those emotions to affect your trade, but you will always be excited when you're making money. You'll always be upset when you're losing money. Period. End of story. Anybody who says otherwise either doesn't give a flying shit about money in general, and the stock market is literally a casino to them, because if you're going into the casino with money you can afford to lose, you'll have a great time winning or losing. It doesn't matter. But trading successfully and consistently winning does not involve treating the market like a casino. Okay? It doesn't. And we all care about money. We have to, because we have bills to pay. And the market can pay you. It can provide you with a good quality of life if you respect it. Know your weaknesses. If you're emotionally weak, this is going to be ultimately more difficult for you than somebody who's not. If you lack discipline in your day-to-day life, then trading is going to be more difficult for you. You have to rely on the tools that are in your brokerages to protect you from yourself. If greed is a problem for you, you better put in trailing stop losses when you enter your trades. Okay? If greed's a problem for you, or you lack discipline, okay, you fall victim to your discipline constantly. You have money in your pocket, you can't walk through the mall without spending every dime of it. We get to a profit target, you best put in a stop loss so that you aren't responsible for your greed taking away anything that you were up at the moment. Stop falling victim to your weaknesses. Avoid, in all power you've got, avoid putting yourself in a situation to even have to face them in the first place. Protect yourself, which will allow you to protect your money. Okay? Consistency is what grows accounts, and it grows confidence. And once you've gotten confidence growth and account growth, then you could start to size up confidently and comfortably. And then these small 20 cent, 30 cent, 50 cent dollar trades go from $10, $20, $50, $100 to $20, $50, $1,000, $100. Just the growth comes when you've learned how to trade. Then you can use it to pick how much money you want to make. But you should never come into the market expecting it to pay you what you think you want from it until you've learned how to respect it enough to ask it for that amount. Holding and hoping is a treacherous, having done it myself not that long ago. Okay? It's a treacherous, slippery slope. And it will destroy your account. It will destroy your confidence. And it'll make you give up. That's what the market does. It feeds on your weaknesses constantly. Don't show it your weaknesses. Do what you got to do. Stop yourself out of losing trades quicker. Okay? Take your profits when you get to lines of resistance or support. The chart is screaming at you, telling you, hey, look at this line, this pink line here yesterday was the low of day. Respect that. Until it changes, respect that that's a support level that's going to hold. It held yesterday on an $11 move to the downside. That's where the buyer said, okay, that's enough. All right, well, why can't those same buyers still be there? Why would one assume that all of a sudden this is a non-existent buying level? Now, the chart today took out that level, and that's fine. Okay, if you held through that and these pullbacks, that was wildly uncomfortable, I'm sure. But we started moving down and continued with our lower low, lower high. That's fine. Okay, but if you know you panic, or you know that if you get to a profitable level, you know you should consider taking profits, and then it pulls back like this, you are now becoming a hold and hoper because you like the profit you saw here. You get mad that you didn't take it down there. Now you're sitting here saying, oh man, I screwed up so bad. I screwed up so bad. If we get back down to that level, I'm going to take my profit. I swear to God, baby Jesus. All right, it's the same guy who gets drunk on tequila, hugging the porcelain god, puking all over the place, saying, oh, I'm never drinking again, only to be at a party the following weekend drinking his ass off. Okay? It's no different. This is what we do to ourselves day in and day out in the markets, guys. All right, so that's all I got for you today. I was a one and done for me and a whole bunch of other people. Again, just look at the ratios. We played some counter trend trades. We played some trades with the trend. There was several opportunities to make money, and then we got into chop. Then we had Jerome Powell, and things just got wonky. Yes, there's money to be made in some of these moves, but I don't know how to consistently find them late in the day without, ignoring supports and resistance levels that we've made throughout the entire day. There should be a lot more lines on this chart, but I don't chart intraday because then I would have a bajillion lines on the screen. All right. So with that, we're going to wrap it up. Hope you all found some useful information in this video. If you did, please like, share, and subscribe. I'd appreciate it. If you'd like to join our Discord community, well, we'd love to have you. There's a link down below. First week, completely free. If you like what you get for that week, please consider becoming a paying member. If you don't want to become a paying member, that's fine. You don't have to leave. You just lose the temporary access to the paying sections of the Discord. Nothing wrong with that. We have a ton of people that are not paying members. That's to each their own. And that's pretty much it. So till tomorrow, I love you guys. See you.